Hello everyone and welcome back to Sudden Wealth, guys. I hope you guys are having a very good weekend. Just to let you know, quick update on my recovery. I'm recovering very quickly. As I've mentioned, at the beginning of April, I should be back to 100%, wearing my mask, wearing my normal outfit. So thank you once again for all the nice messages of support. As I've said, I'm going to be traveling next week, and I actually had a question for you guys. Like, I can do a live stream, one or two live streams actually, but with this setup. Just let me know in the comment section if you'd like me to go live even in this setup, or if you'd like me to wait to be 100% recovered, with a full outfit. Let me know what you guys think in the comments, and I will try to accommodate as best as possible. Yeah. And with that, guys, by the way, don't forget, like and subscribe. It's the only thing that I ask. I don't ask you for any money. Just ask you. I don't sell you anything. Just if you enjoy the content, drop that like and subscribe. That's all that I ask. Now, today I'm actually quite excited because I wanted to discuss a few things which I believe are very important. But let's start first with stocks. I've been focusing a lot in crypto and not so much in stocks. So in my view, the stock market no longer carries risk. Now, before people go crazy, what is it talking about? Don't we have sell-offs? Are you telling me that it's going to be green forever? No, I'm not saying that. What I mean by no longer carries risk is it's pretty clear that every time that you're going to have any major sell-off, any sell-off with some dimension, meaning 30%, 25% plus, 40% plus, the central banks will immediately intervene. Now think about March 2023. Regional banks start to fail in the US. The Fed increases its balance sheet by 800 billion. For you to have an idea, in the Great Recession of 2008, it took the Fed 1.5 years to print $1 trillion. This time took them 2 weeks to print 800 billion. That's my point. And when I say that it carries no risk, is in this sense. When you're building your portfolio, and this is very key for people's wealth, because these two terms get conflated and confused many times. Inflation and debasement of currency. So I think it's important to make a distinction between the two. So inflation is, you go to supermarket, things are more expensive. You go, your insurance cost is more expensive. Your travel cost is more expensive. Your gasoline cost is more expensive, blah, blah, blah. Everybody knows about it. Now, let's say that inflation is 3-4%, and let's say the S&P goes up on average 8-10% per year. You say, okay, if I buy stocks, if I buy the S&P, I'm outpacing inflation. I lose a little bit to inflation, but overall, on average, over many years, I'll be winning. Now, the thing that people don't see is the debasement of currency. Now, that happens when the money supply increases, but it's not lent out to the population, so it does not pop up in the stock market. Where do you see this? Okay, let me give you this example. In the past, you could buy an average house with 2 times your yearly average salary. Now, you need to buy an average house, you need 10 times, 10 years of your average yearly salary. That means that now the cost of housing, the cost of real estate has now gone up 5x, but this doesn't pop up in the CPI. But it's the same issue. Now, it's the same issue in the sense of you're trying to buy something, you try to get ownership of assets, but that has become extremely more expensive. Now, if you already own a house, you're very happy. If you already own stocks, you're very happy. But if you're coming in right now, you're screwed. It's costing you more and more percentage-wise of your salary, or more and more years of your salary to buy the same assets. So on one side, you have the inflation that when you go to supermarket. On the other side, you have the debasement of currency. Now, the debasement of currency over the last 15 years is about, the best estimates I've seen, about 10 to 11% per year. Now, all of a sudden, if you combine the two, the CPI and the debasement of currency, the S&P 500 barely break evens from both. Now, tech stocks in the US have been outpacing it, so you make a little bit, Gold has lost, gold needs to go to $2,700 just to make a new all-time high versus 2011, inflation adjusted, and it needs to go to $3,400 to break even just for the inflation, not even the debasement of currency from the 1980s top. And this is using the government data, which we know it's already skewed. So gold is not the answer as well. The only asset class that has been outpacing, besides tech stocks that we just discussed, has been crypto, which has been outpacing and outperforming everything. And when people say, "Whoa, why does crypto go up so much?" It's very simple. Stock market is about $280 trillion. Real estate in the world is about 300 trillion. And bond market in the world is about almost half a quadrillion, so about 480 trillion. The entire crypto market is less than 3 trillion, so it's much easier to move it. Furthermore, it doesn't have the real crypto does not have overhead costs. You don't have a salary, you don't have a CEO, you don't have a management team, you don't have employees, you don't have overhead costs. And you're trying to address, particularly with Bitcoin, you're trying to address the deficiencies of currency, the debasement of currency. So as long as the governments keep printing money, you're gonna have Bitcoin and other cryptos going up in value. It's very simple. There's no big conspiracy, there's no big, person behind the scenes manipulating anything. It's just you are printing money, and it's very clear that you need to print money again. Now, why is it so clear? Why am I so convinced of this? Why did I make that prediction, if you guys recall, that the US will have a Fed funds rate negative before the end of the decade? The reason is very simple. The US government is $34 trillion in debt, right? Now, is the Federal Reserve, is the Treasury producing surpluses? No. They are producing $2 trillion deficit per year, plus $1 trillion of trade deficit per year. So there is $3 trillion that needs to be borrowed every single year, all over again. Now, over the next 18 months, about 2/3 of these 34 trillion will mature, and they will need to be refinanced at much higher rates. What this means is, at the current rate, and let's imagine there's no recession in the US, which means, if there's a recession, these $2 trillion budget deficits, they will go to 4 trillion very quickly. But let's say everything stays the same. $2 trillion, $1 trillion of trade deficit per year, 3 trillion per year. You refinance 2/3 of the debt. That means that by 2028, 2/3 of the entire US tax revenue, now this is business, this is wealth tax, this is inheritance tax, this is income tax, this is all the taxes, 2/3 of all the tax revenue will go to pay interest on the debt, not even the principal. You're not even repaying the debt, you're just paying the interest, which of course it's impossible to deal with. People are already overtaxed, people are already over-indebted. So what is the solution? Print money, lower rates to zero or negative, push asset prices up, and that's your solution. And now, crypto offers a better form of money, and that's why crypto is such a revolutionary technology. Of course, it's filled with scams. Of course, it's filled with rug pulls. Of course, it's filled with coins with no value. But that is the case for any disruptive technology. When the companies like Amazon disrupted the world, the majority of .coms at the time went to zero. Same thing will happen with AI stocks. So you have a lot of AI companies which are nothing more than PowerPoint presentations. That's it. They will never do anything that they promise to do. However, they are getting a lot of money at the moment because AI is very hot. Now, the majority of these companies will disappear, will go to zero, will never stop being a PowerPoint presentation. But there are going to be a few of them who will change the world forever. And those will be the best investments for the next upcoming decades to come. Which ones are going to be? Well, that's a more difficult question to answer, right? And with that, I transition into crypto. So if you guys watched my last video, I said, we were selling off a little bit. I said, okay, we are pulling back a little bit. Look at the level 65K, that should hold. We hit 65K, straight back up. Now, what I want to share with you is, after, and when I say after, I'm saying around the halving period. So once again, Bitcoin halving is a buy the rumor, sell the news event. The miners, if you look at Bitcoin miner stocks, they're already selling off in advance. But but give it, plus 1-2 weeks, either before or after, okay? Around the time of the Bitcoin halving, Bitcoin goes down 38% 2012, 39% 2016, 38% 2020. Now, if we go to 80K before the halving, which I think is very likely, if we drop 38% from there, we go to around 48-50K. Now 48-50K is a major support because that was the breakout area before the bigger moves to 72, 73, 74K. So I get the feeling, not sure if I should make a prediction here, but I would say what I'm expecting is Bitcoin goes to 80K, then we have the sell-off of the halving, which is normal. Peter Schiff will tell you to sell all your Bitcoin and buy gold stocks and do all this kind of garbage. I think we probably sell off into 48 to 50K. Maybe we don't take a month or 2 months as we usually do. Maybe we take 3 weeks. And then we go up from there, from 48 to 50K. Final price, I'll come up with that later, but I'm liking a number, 240,000. But don't quote me on that. I'll add it out in the future. Now, what am I doing with my core coins? Now, Pulse Chain, PulseX, Hedron and Icosa, they've just had a major sell-off. So we just went down about 30 to 40%. Now, if you guys have been here from the start, you know this very well. What has been my strategy? I'll repeat it ad nauseum once again. During the bear market, I just buy indiscriminately Pulse Chain, PulseX, whatever goes down the most. I prefer Pulse Chain and PulseX because they are cycle 1 coins, so the majority of my bags go into Pulse Chain and PulseX. Now, when we arrive into 2024 and the beginning of the bull market, which is where we are now, I am stopping buying indiscriminately and I'm starting to buy bigger clips at bigger sell-offs. That means when my coins that I like go down 30-40%, I buy a big ticket, let's say $3,000, $4,000, instead of just buying $200 per week or whatever. So I do it more targeted. So that's what I'm trying to do. So every time I see these major sell-offs, because they last less time. So for example, you saw the Bitcoin sell-off, right? Bitcoin sells off. It no longer takes a month. It takes a few days, a week, maybe 2 weeks, and then we go back up again. So those are the dynamics of the bull market, which is important to understand, is that these things now get accelerated. I think the last big opening for Bitcoin in terms of entering will be the sell-off of the halving. People are saying that this time around there's not going to be a sell-off in the halving. Once again, guys, what you're saying is buy the rumor, buy the news event. First time in history, have fun. I don't think so, but who am I? Maybe I'm wrong. But the important point is there's going to be sell-off, particularly in altcoins, that can be quite aggressive in the short term. So this is why my target is 2025. So I look at 2025. I don't get lost in these movements on a weekly basis because they can really throw you, and I've seen some people already, they can really throw you away, and they can make you, if you endured the bear market and now you come to the finally the year, which is fun, and now you blow it all up because you cannot take the volatility. And the reason why I like Pulse Chain and PulseX is because they are, first of all, they're, I've explained ad nauseum why I like them, but one thing needs to be said. They are cycle 2 narratives. That means they still go up a lot. They should go up a lot, but no longer the 1000Xs and stuff like that, maybe in my view. And maybe I'm wrong. Maybe I hope, oh my God, you have no idea how much I hope that the thing goes up 10,000x, but I don't think that's going to happen. The point is the cycle 2 narratives, they still go up enough if you are positioned well enough. So I'm more concerned, and I was more concerned through time, to position myself in a way that I don't need 1000x to succeed, a 50x, 75x, and I'm going to be extremely happy already. But I don't need the moonshot 1000x, catch the bottom on the exact day, sell the top on the exact. I don't need all of those stars to align in order for me to succeed. And then what I'm starting to do now, and you guys are aware of this because I've been disclosing this publicly, is I've been looking for lottery tickets for smaller plays in cycle 1 narratives, or coins that are linked to cycle 1 narratives. Why? Because those are the ones that people want. People want AI, gaming, meme coins. So I've been trying to position myself also on that market. So for example, Pick a Moon with gaming, Wolf, Brett and Andy with the meme coins around Pepe coin. I've been now positioning with Pulse Launch. Why am I positioning with Pulse Launch? I think what's missing a lot in the ecosystem of Pulse Chain still, we need AI and we need gaming coins. Now you tell me, oh, but those coins mostly they don't work, they are garbage. It doesn't matter. This is what the audience want. You give them, in order for them to come to your city, you need to provide or you need to offer services that they want to see, not what you think is better for them. That's not how it works. You need to give them what they want. And then they need to make their own decisions. But in order to have a successful city, it's a little bit like, okay, what is good for you? Healthy food, cultural events, sleeping well, go home early, catch a bit of sun. But what do people want? They want gambling, they want parties, they want alcohol, they want smoking, they want entertainment, they want to be up at night at 5 a.m. They want, you see what I mean? Like they want that, so you need to give them what they want in order to be a vibrant city. And with Pulse Launch, although launchpads are not a cycle 1 narrative, they're a cycle 2 narrative, they will be launching projects that will be cycle 1 narratives. In that sense, and I think that will improve quite a bit the ecosystem going forward. And look, there's been drama in the community. That is normal. We are in this stage of the cycle in which there's still a lot of rinsing to be done. The majority has been done. I think we have one last big rinsing to go. But the point is, I've changed my strategy. I've been executing my strategy, buying bigger clips at bigger sell-offs, stay the course. 2025, the projects are good, they have good potential, and then have the proper cycle 1 narrative lottery tickets. Because why? Because since they are why do I call it lottery tickets? Since they are cycle 1, I do not have the time to study them with the same carefulness that I would during an entire bear market. But when you're in the middle of the bear market, it's impossible to know what's going to be the next narrative on the next bull market. So what you need to understand, and this is my point of view, is okay, let's go with a cycle 2 narrative that will work very well and build my core position over there. And then have a bunch of lottery tickets in cycle 1 narratives, because if one of them goes up 1,000-fold or 500-fold, I'm good enough. I don't need to have $50,000 invested. No, I mean, if I have $500 and something goes up 500-fold, that's $250,000. It's good. It's excellent. My God, what I'm talking about is excellent, right? But this is the point. This is where people get it wrong. And when you really have the altcoin season, the pure altcoin season, is when Bitcoin and Ethereum, Bitcoin starts to decrease, but it's not coming back. Ethereum starts to decrease without much coming back. Then you have the orgasmic move on the altcoins, and then there's your first altcoin season. I think, from what I've seen, we're still gonna have 2 altcoin season bubbles. The first bubble probably, between April and June. I thought it would start in March. It has started in March in some coins, but not all of them. I would say between April, May, you're gonna have a nice altcoin season. I think we're gonna have a sell-off, call it a hangover period. Hopefully that matches, the bottom of that hangover matches perfectly with the rate cuts in June. I still think maybe in May, but definitely I think in June is going to happen. And then we can go up into the final legs of the bull market. And then it's going to be, then the difficult part will be the second part, which is to have the sobriety to go out, to sell. I'm not planning on selling everything, I've said this before. I'm planning to sell somewhere between 75 to 80% when I feel most likely the top has been in, but I will leave 20 to 25% in case of being wrong, because if I'm wrong, those last 20-25% of my portfolio will run probably 400 to 500%, over a couple of weeks. So I don't need to have such a big position. Then I will probably stake my coins in lending protocols and make some some stable coins. And then I'll be positioning for the next bull market. I will take some time off, probably diversify a little bit into other stuff like real estate. We'll see. But that is my plan and my course of action. Sorry guys, the video was a bit longer today, but I felt I felt energized. I thought, this is a lot of good messages to come out. So this was important to be discussed. And I would like to thank you all for your patience. By the way, don't forget to let me know if you would like to see a live stream, even if it's in this, suboptimal setup. And with that, guys, I'll leave you be, and I'll catch you in the next one. Thank you very much for your time and your support. As always, drop that like and subscribe.